Welcome to the fourth training session under the Technological Infrastructures Capacity Programme. We hope you will feel it will be useful.
Good afternoon, everyone, and welcome to workshop number 4, Technologies, Value Assessment, and Commercialization Strategies. My name is Irene Brenes, and I am a consultant at Clarke Modet. I have a bachelor's degree and a master's degree. ¿Se puede cambiar?
No.
Well, I'm continuing. Yeah, okay. And a master's degree in business administration and management from the University of Costa Rica. I have also completed the advanced studies diploma in the PhD, New Trends in Business and Management of the University of Salamanca. As for my professional development, I have worked in franchise development consulting in Mexico and Central America. And since 2016, I have worked at Clarke Modet, where I have collaborated in the area of trademarks, and now in the consulting area, where I perform assets valuation reports. I'm sorry not to be with you today, but I have an injury in my leg that made me impossible to travel. So I'm here in Madrid, and Coral Navarro, that is my teammate and that is there with you, we both will share our knowledge about assets economic valuation and technology transfer. So I will now let Coral present herself.
Yes, hello all. My name is Coral Navarro. I'm IP consultancy specialist, just like Irene. We work in the same team. I have more than 10 years of professional experience in IP. I'm a lawyer. I'm specialized in all kinds of protection of IP valuation, protection of trade secrets and confidential information, drafting secrets, and also defense of the rights in front of courts. I have a master's degree in IP from the University of Madrid ICADE, and well, as I said, I'm a lawyer, and I'm here to support my colleague Irene, which recently had an injury in her leg, so we're very sorry she couldn't make it, but I'm here for you and to answer any questions or anything that could arise. Okay, so now Irene will start with this presentation, this talk about IP evaluation. First, talking about measuring the potential value. Okay, Irene.
Okay, thank you. Well, we have our class today will be divided in 4 items. We'll start with the first one, that is measuring the potential value of technologies. Here we find in this start, Coral, could you please pause?
Yes.
When we talk about measuring technologies, we find here the first dilemma when we make a economic valuation. What is value and what is price? These are 2 different concepts that depends on the person and depends of many reasons. For the starters, in value, in simple terms, price is what we pay for something. But value, on the other hand, is hard to measure. It's based on how useful to someone is something and how much it means to them. For example, if we talk about art, like that art scheme that we find in the presentation, for someone that could mean anything, but for someone else that can be a value asset. So the value of something depends of the buyer, the seams of the seller, who makes the valuation, and why and when are we being assets. It depends of the technology of something, of the maturity of the technology, when we're talking of assets or any technology, and it depends of how it is being evaluated. So when we talk about price and value, it's very variable of the person that is making the valuation. Next. Next, please. Okay, so when we talk about technologies and the value of technology, we have basic concepts. So we have to understand that intangible assets can be measured. They are the same as an tangible asset, like as a building or a car or any other asset. We have international standards that makes us that indicates us how to measure and value the economic value of an asset. So in case of someone says no, but that's a patent or that's a trademark or that's a software that may or a trade secret included, that they don't have an economical value. That's not true. We can give them an economic value, and we can use them to be used as a collateral or any other required transaction. So it's important that we know that all technologies can be measured. That's another thing that is important to take into bear in mind. However, to perform, next please. However, to perform an economic value of something, it's a very complex process. First, we have to understand what the asset that we are valuing or measuring, what is it combined. Sometimes when we talk about a product or a technology, we find that there is composed of many other IP rights. For example, here we have a sneaker, a Nike sneaker that has a value of $220. But why do we have this value? This product is composed of a patent, of a trademark, we have a know-how, and we have an utility model, and we have materials. So when we are valuing the technology, we have to take in mind that all these assets can be combined to form a product. So we have to value this product with all of them as a whole. So when we go to value a technology, we have to understand that this technology might be composed of many other assets. And these assets have to be analyzed by themselves. For example, if Nike wants to know what's the value of these sneakers, they have for the patent and the design. So this patent and this design have been registered in some countries. So I have to know where in these countries are registered, and so I will know if I have the potential or the scope to have them registered in some countries. I will have this protection for only these countries. It is also needed to know that all these assets have a time. They have a legal life that we have to know and understand. For example, when we talk about a medical product, we know that when we register a patent, we have to then do a clinical trial, and then we have to do a register in any other, like the EMEA or the FDA or any other institution. So this give us a less legal life for this product to value it in the market. So this is very complex, and we have to understand where do we have the legal terms, we have the geographic limitations, and the time. Also, when we do an economic value of an asset, there's also a limited availability of information. We don't know how much the patent of Nike costs us for if we want to buy them, the system for the pump when we go to the footprints, and that gives a special value to this product. In the other hand, we have the other shoes that are the Converse shoes, that Converse have been made in this design and these trademarks for more than 100 years. So they have amortized their investigation and their costs so they have a lower price in the market. So this is a very complex situation that we have to understand and analyze when we come to a technology that we have to evaluate. So as I was saying, when we measure the potential value of the technologies, we have to take in mind that sometimes these IP rights are not indivisible. So when we have, for example, a technology platform, these technology platforms may have a software, or may have a trademark, and may have domains. But all of these three assets together is the product that I have in the market. So I have to value all of three of them as oneself. So we have to understand very well what's the technology what we have, and we have to identify very clear what are the assets that compose the product. So when we do a brand portfolio valorization, we have to take in mind that all the trademarks that I compose, maybe there are maybe we're talking about a portfolio of 100 or 200 trademarks, but all these trademarks are for only one product or two or three products. So when we do the evaluation, we're not doing 200 valuations or 200 analysis for this portfolio. It's just the ones that give us the income and the products that we are setting in the market. So here we have a famous quote from Peter Drucker that says, "If you can't measure it, you can't manage it." What he means in this quote, that all that we have, we need to measure it in order to compare it. So if we have a technology, we need to measure it, or we have a IP portfolio, we need to measure it in order to compare. If we have quality indicators or any other indicators, or we have to go to the market, or we want to license this technology, it's better to do it if we know what's the value of this asset. So we're now going to see what are the reasons for quantifying the intangible asset. Here we have that measuring the potential value of the technologies, we have to first question us why and when. For instance, when we are a company or a university is planning their strategy, and they have to analyze their IP management, or they're going to report how is the investing in investing in investigating and development. So we have to know what is my IP portfolio value, so we can get any financial or any other help, or we just want to give our KPIs, so we have to continue investing or investigating. So we need to know how much our portfolio, IP portfolio, is worth. Another reason of why and when we have to measure is if we need a financial aid. So we have to go to seek a collateral, or we need a loan. We have to activation of intangible assets in our financial reports. So we need to know what is the value of our portfolio. Also, if we're doing any transaction, or we're licensing or selling our IP asset, we need to know what's the value, so we can go and negotiate with the other part. Also, if we have an infringement of an industrial or intellectual property right, it is necessary to quantify the value of the asset in order to calculate the compensation or the loss or the profit, if any other case. Also, another reason to measure the potential value of the technologies is if we need to activate the value of these assets in accounting, in a balance sheet. So we need to know what's the possible value of our technology. And for another reason is for tax purposes. That's very important if we are doing investigation and companies are investing in technology. They have to know what's the value of the assets, and also here we can include the what's third-party related transactions. So we can, if we're planning a spin-off or any other figure, we need to know what's the value of the assets of the technology. Why and when? Okay, continuing with this, we have the when we measure the potential of the value of technologies, we have some figures of some elements that we have to take in account when we want to activate the intangible assets in the company. For example, if an intangible asset is acquired separately, the acquisition value can be activated as an intangible asset. For example, if we have a trademark that we have in our know that I have made some investment in marketing. I can't give that investment in marketing a value of the trademark. I can't activate that value. Only if the company has to go and buy that trademark, I can activate it in my balance sheet. So it's important to know it. When can we activate this asset? In the other hand, if the intangible asset is acquired as part of business combination, its value at the acquisition date can be activated as an intangible asset. It's very related with the first case. And this is very important in case of when we investigate it. If the asset is internally generated brands, customer lists, or other similar items cannot be recognized as intangible assets. So it's very important to know when and where can we include these type of assets. Only an intangible asset that arises in the development phase of an internal project can be activated as intangible. It's very important that we know when can we, if we're seeking to have a technology and we need to activate this technology in our assets, when is the moment and how can we include them in our company's numbers? And now Coral will explain you about the different methods of technologies, and we can evaluate these technologies.
Yes, so as Irene just explained, first we need to know what is the objective, what do we want to reach with our evaluation, what is our final goal with evaluation of the intangible assets we're going to do. So then, once we know what we have to focus on, we can choose different valuation methods depending on this final achievement we want to reach. So there are three kinds of methods. There are the cost method, the market method, and the income method. These usually are called as a past method, the present, and the future. The past, because the cost was the past, what it cost us, the present, what is happening actually in this market, and the future, what income are we going to receive from the exploitation of these intangible assets. So these are the three different approaches we can find, and depending on the perspective, each one of them could be better or maybe worse. We need to analyze them always depending on this final goal we want to achieve. What is our final objective of the evaluation? So with these different methods, for example, market, what does this mean? Market is how much are others paying for similar technologies right now? For example, a license for exploiting a digital platform. We want to value this asset. Well, if we want to know what's happening in the market, we'll see right now what is the cost actual in the market for this same kind of digital platform. The cost method is how much have we invested in designing this digital platform? How much did it cost us? How much did it require? For example, costs in development, costs in equipment, all these are valued to get the cost of the product, which will be this valuation method. And then we also have the future income. This will be knowing what do I expect to gain from this technology? What is the income I'm going to reach in the future? If I design this technology, if I exploit it, what am I going to receive in the future? So first we will start with the cost method. As I said, this one we usually call it the past because it's like the previous method, like what did we need to invest to reach to this technology or to this development. So in the cost method, the value is equal to the creation, acquisition, or replacement costs. Creation is what I needed to invest. Acquisition, what would it cost me if I had it to buy an intangible asset like this one right now? And replacement cost, well, more or less the same. What would I need to pay if I would need to replace this intangible asset for another one? So the cost method is limited because it only analyzes all the costs, all the prices related to the design or development of the technology. So it has advantages and disadvantages. The advantages is an improved IP management. It helps us know how much we had to invest to reach to this technology. We know all the costs, so it helps us get to a future better management. For example, to decrease costs for a future development. It is an interesting indicator of R&D investment, and it's useful for activating expenses as an investment or obtaining tax benefits. This is only possible when we have the intangible asset activated in our company's balance sheets. And the disadvantages are that there's no direct correlation between costs and the potential value, because really we're only looking at the costs. We don't know what could be our future income, or we don't know actually what the market is selling these products for. And it's difficult to define what costs enter into the assessment. Which costs are we going to include in this valuation method? Other capital costs, protection costs, our marketing costs, salaries, all of them, it is not clear. This method, as we said, has advantages and disadvantages. The importance is to know what is our final goal. For example, this cost method is commonly used, for example, in bankruptcy proceedings. If you are in a company with a bankruptcy proceeding and you have intangible assets you need to measure, you need to give an actual value, they're not going to be exploited in the future because possibly the company will end up closed or liquidated. We will need to get an evaluation method that could give us an actual value for these assets that are not going to continue in the future. So the cost method could be like the perfect method in this case, because we will know what it took to develop these assets. We get an actual value, a value supported by different costs entered into, like the marketing, the salaries. We can activate it in the balance sheet of the company and we get evaluation. But for example, this is not usually common. As I said, a bankruptcy proceeding is not very common, but the cost method could be very useful in this sense. Then we have the market method. The market method, what gives us is the value of the asset comparable with other market transactions at this moment. So the advantages is that it serves as a reference to check the validity of the assessment by other methods. As you see, not as a valuation method by itself, but it can help complete other methods. For example, you can use the cost method with the market method, and you get a bigger scope. So you get a reference of the actual market price, and you can compare it with other costs that are needed to develop this technology. And it is very complicated to access to information. This is the biggest disadvantage, lack of active, formal and transparent market, and maybe that we have a technology that is unique. There's nothing like this in the market, so we don't get costs to compare. We don't know what the market price is. Really, the problem usually is the information. It's very difficult to get actual information of what is happening in the market right now. So these are the disadvantages of this method. The benefit of the market method is that it's simplicity. Obviously, it's quite simple. We just need to search the market and see what are the transactions actually in this market. For example, Google paid in 2011 12.5 billion acquisition of Motorola for 24,000 patents. In 2010, Microsoft paid $450 million to Nobel for 892 patents. Here are actual facts, and in this time, for example, Google in 2011, here we would know what the actual price for something similar, for this intangible asset of Google, what the market could be. And the problem is the lack of information. Here, for example, we only have this information. In 2011, we had information about Google acquiring Motorola, but maybe we didn't have information about another company acquire another tech company in similar circumstances, so we couldn't even get to compare different prices. And then we have the future income method. This method gives us the future income or savings attributable to an asset. This is what is going to be our future income when we exploit this technology, when we reach IP licenses, when we sell it, and when we exploit it, or what would be our savings if this technology wasn't ours and we would need to obtain a license to exploit it. This double factor we can analyze. The advantages are that it's a flexible method that allows the evaluation of different alternatives, and information is more accessible than the market information. Disadvantages is maybe the uncertainty, because we can find information, but we really don't know if it's certain. Many things can happen in the future, for example, legal risks, technological risks that could affect this valuation method. And it's based in subjective parameters. We are talking probabilities. It is probable that this technology will have this future income, but we can't actually give it proof at this time. So in this future income method, it can be applied in a different large number of scenarios, despite its complexity. The direct income methods are the discounted cash flows, the excess profit, the premium prices, and then we have the royalty relief. The royalty relief is a combination of this future income method with an analysis of the market. As I said previously, the market valuation method is commonly used to support other valuation methods, as could be costs, or in this case, future income. If we mix the future income method with the market method, we get what we call the royalty relief, which will give us savings on hypothetical post-tax royalties from owning the intangible. Here we see in detail the royalty relief, as I just said, market method plus yield method, we get this new mixed method. This is the one most commonly used, and this is the one we usually take into consideration for most of the evaluations we analyze. So this is one of the most accepted methodologies because it's very simple. We need to analyze the market and the future income, but it is more complex in one sense. It's more complete because we have two different valuation methods combined and gives more robustness to our analysis. The value of the asset is calculated on the basis of the amount that an entity would have to pay to a third party, these license or royalty agreements, for the commercial exploitation of an asset, if we didn't own it. As I said previously, this value will be what could we license the technology for right now, or what are we saving because we own the technology and we don't need to enter into a license agreement and pay the actual royalties. And this method requires the determination of estimated future royalty payments, which are derived by applying the royalty rate. So here, with the royalty relief, what we do is when we analyze the market, we analyze what could be the future income, and with this we analyze the actual royalties in the market right now. We analyze license agreements, any kind of agreements that could be similar to what our final goal will be, what we want to do with the technology. And also we do analysis of the market. We combine these two analyses from actual agreements, from licenses, and what is happening in the market, and we can project a future income. This method also is more accepted by tax authorities as it combines the future income approach with actual market information, giving greater objectivity of the assessment. And this methodology is in accordance with the International Accounting Standard. So really it's like the most common and most commonly used evaluation method. So now my colleague Irene is going to continue talking about strategies for marketing of IP. Irene, please.
Okay, thank you, Coral. Well, we've seen the different, first we see why and how and when we have to do evaluation of technology. We have different methodologies that Coral just explained about how to measure and evaluate a technology. And once we have that evaluation, now we're going to see what are the strategies for marketing my IP. If I develop a technology, my final objective is that that technology is set up and put up in the market. So we're going to see how we're going to do this step. Okay, when we talk about technology transfer, we have, according to the WIPO, technology transfer is a collaborative process that allows scientific findings, knowledge, and intellectual property to flow from creators, such as universities and research institutes, to public and private users. Its goal is to transform inventions and scientific outcomes into new products and services that benefit society. So when we research and we develop a technology, we have two kinds of transfer. When we talk about vertical technology transfer, is the one that we go from one organization, passes it to another organization. It can be defined as the process of transferring research and development activities into a commercial environment. For example, if a university has developed a patent or a software or any other technology, and we want to transfer it to the society in general, the public in general, we can find another company or create a spin-off, or we're going to see more overhead what are the different kinds of different forms that we can have to transfer our technology. We're going to give it the technology so they can exploit it. We can do a license or we can sell the technology. There are many types of transferring. So in this process, we give this our technology and our IP to these other organizations, so they will exploit it in the market. In the other hand, we have horizontal technology transfer. This kind of transfer is the process of taking a specific technology that exists in one market and transferring it to another, usually less developed market. For example, a new application in a different market segment. So if we have a technology, for example, some technology related to ion batteries, these batteries can be used for electric vehicles, or we can use the same technology for another sector that can be electric solar plants for recharging. So if we use the same technology but in different sectors, this will be an horizontal technology transfer. Now that we have the two different views, we can see what are the figures and what are the mechanisms of trespassing these IP marketing strategies. So when we have the technology, we can agree or we can negotiate with the other part different mechanisms. It can be a sale, where I give my technology and they develop and I don't do anything else, or I can license. In the licenses, we have different types of agreements. We have to negotiate with the other part, and I can limit what they can do with my technology. For example, I can license the patent for a specific territory, or I can license my technology so they can continue developing, or I can license my patent or my trademark so they can use it exclusive, or I can sublicense to other people. So we have to be very clear what we have to do when we license, and what are the rights that I give the other part so they can exploit it. Also, I can do a technology development. In the technology development, I with the other part, we have we can give another. They can put some capital, or they can invest in developing my technology, because maybe it's a patent or it's a technology that I have it in a TRL very low. So I need someone to help me and to invest so I can develop this technology and I can put it in the market. This will be another way or another mechanisms where we can transfer this technology. Another one that is very common with universities and with others is the joint venture or a spin-off. Here what we do is create another company that depends on the university, or that university has a part of this new company, and they develop the technology. So, or the the technology. So when we create the spin-off, sometimes the spin-off has the license of this technology and they exploit it commercially in the market. So it's very important also to know what are the limitations and the rights that I give the spin-off and what I transfer to this spin-off. Okay. And finally, another form or mechanism for transferring the technology are acquisitions or mergers. Here in a merger, well, two companies or two normally in the private sector coming together so they can develop this technology. And it's in all of the cases they have pros, they have cons. But here we know the first thing we need to know is what is our objective, what is our strategy, so we can proceed and select what is the more beneficial agreement for our interests. Also, when we do this, we have these mechanisms, we have to do another research. It is only we have to do, besides the economic valuation, we need to do a little more of investigation. First, we have to know what is our technology. We have to know what is the different sectors, or where can I apply my technology. So we have to do a screening that's understand what's happening in the market, what are my competitors, what is the maturity of my technology. If I'm talking about a patent, are there many other patents that are in the market? What is the maturity level of our technology? So we have to analyze these factors so I can project or my market share. Also, I have to do the market assessment. I have to evaluate if I have my patent in a territory, a defined territory. So what's the possibility, and what are my competitors, and what's until what can I develop in that market? If I need any other help in marketing, if I have to do a launch of my product, so I need to have a big investment. And also, if I have to negotiate with another part, or I have to negotiate with other companies or other sectors that I have that include. So these are very important steps that we have to do, we have to analyze before we can transfer our technology. Also, if I'm talking about the pharma sector, we need to know all the regulatory things that we have to do in one market or another market, so I can launch my product and I can exploit it in the market. So we have to do a very what we call an IP sanity check and the market assessment of my technology. This all I just talked about, we can include it in a document, something like a market plan, where we will include all these different steps and facts that I have to understand so in order to transfer my technology. First of all, we have to include all the investment that we have to do in respect of my IP rights without but the evaluation plans. I have to know if I have a technology that is very disruptive, and I know that it has a very high potential of exploitation. I have to include in these projections that I do all the investment that I have to do to protect my IP rights. It's important to know what are the steps required. Also, I have to know what is the return on my investment in research and development. I have to know what was the cost of developing my technology. So we have to assure at least the return of this investment. That's another point to bear in mind. Also, I have to understand that if I transfer my technology to another market or more competitive, we have the possibility of have innovation products. I have to take in mind that if I have a very disruptive product, that in the near time, in the close times, there will be competitors that may have a product similar to mine, and that will affect my growth strategy. So it's important to know what are the competitors, what are the possibilities that I can find in the market, so I can I have a strategy for that. That gives me to the next point, that's the product differentiation. I have to know what are the advantages of my product, what are the debilities, so I can have a strategy, a very plan for this technology transfer. Also, when we do the scanning of competitors, I will also identify partners to share efforts in new developments. If I'm planning a technology that can be enhanced with another product, I will identify these partners that in the meantime or in the next future, I could join efforts with them, and we will create a new product that will extend my technology. Also, if my IP strategy does not follow internationalization, well, what would the strategy be in case of that transfer? I have to know if I giving my patents or my trademarks to another part, what are my limitations in geography, so we can plan another alternative routes so they can develop their market. Also, when we go back to the mechanisms of technology transfer, we have to know that there are 3 types of mechanisms. That will be acquisition of knowledge and technology. We can do a collaboration, or we can do exploration, commercialization of research and development results. In the first case of acquisition of knowledge or technology, there are 3 figures that will be that we decide to give the other part the license of my technology, or we can do a corporate, or we can do a merger. So this will be in this case, I will give my license to them, and I will limit somehow the rights that they can do with that technology. In the second half, we have what we call the collaboration. We can form a strategic alliance, or we can do a collaborative project or joint venture with another company in order to develop my technology, or I can start an open innovation initiatives. So in this case, I will still control some of my technology, and I will be able to decide what we can do or what will be the strategy we will follow for this kind of transferring. And in the other end, we can do what we call exploration or commercialization of my results. In this case, we can do what we call a licensing, a sale, or creation of spin-offs. In this case, the other part will be the ones that have the control of this technology, and they will decide what we're going to do about them. So these are depends always, as we've been saying, it depends on the objective and the strategy that we have among our technology. In the next slide, we can see it better. In order, what do we want to do with our technology? We want to have the control and knowledge of the knowledge and the know-how. On the other hand, we want what we want to do with the control of the application and use. So we sell the different figures and the different mechanisms in this graphic in order to know what to do. And if I want to control more the knowledge and know-how of my technology, and I want to control what are the applications and what it is used for, the figure that I will do for transferring will be an internal exploration. In the other hand, if I don't want to control any knowledge, and I don't really I don't want to have the control of the application and use, what I will do is the sale of all my IP rights. In the meantime, between the two possibilities, we have the spin-offs, the joint venture, the license, a general exclusive, or a license non-exclusive of my technology. It depends on, as I've been saying, of the objective and the strategy, as well as when we talk about the mechanisms of why are we evaluating our technology, we have to be very clear of what we do want to do for our technology.
This is the end of this session of the Capacity Programme for Technological Infrastructures. We thank you for your participation and look forward to seeing you in the next.